Now for liquidity, yeah, I guess when we do sell a little, we are paying the taxes, Brett. But I mean, your program has interested me so much that I got to get into that system to see where I can save next time there's a big run up, in the tokens.
The ability to defer capital gains taxes on the sale of cryptocurrency, right? What would that mean for folks that are out there that maybe have multiple millions and they're looking to exit and they don't know how without deferring the tax?
Well, I'm not a tax expert, and my tax people point to mostly the ability to on certain coins get staking rewards, which are from what I understand, tax exempt, and be able to defer those gains through that. But I'm, as far as the tax laws go and timing of tax sales, Brett, I'm definitely not. I would not be qualified to give your users any tax advice.
Right. And I guess yeah, well, we do have a solution for that. That's what we do, right?
Yes,
capitalgainstaxsolutions.com. If you guys want to learn more about how to exit cryptocurrency, defer the capital gains taxes, and really build a plan for that. Like you want to hire and work with those to help you with investing in different things and different research. We do the tax planning around that. But I guess the question is just a broad, yeah, just a broad sense, Tony. In a broad sense,
yes.
What does it mean to be able to sell high? I'll give you another example. So we sold the 5 million to the 50 million at 54,000 a coin, but I called her at 60,000 a coin, and I said, hey, look, your 45 million has jumped, right? Again, now it's even higher. We could exit another 5 million. Like, what about that? And then it went to 65,000 a coin, and then it went to 68. I think it topped out about 69, right? Before everything kind of went the other way. But the concept was this: sell high and buy low, right? Like we know when it's a good time to sell, typically for real estate, hopefully some of the stock market, but cryptocurrency in particular can have these really high highs and low lows pretty quickly. Yeah. And in my mind, I'm going, look, we can sell and take off large amounts and put it into cash, all tax deferred, right? And then you can go back and buy the crypto all tax deferred when it makes sense, right? And so just that overall concept of sell high and buy low, while you don't have the tax consequence immediately, it's deferring that tax. Like, what will that mean for people? And maybe this is just very common. Maybe, and to us, we feel like it's not common. People haven't figured this out. We have, but Tony, tell me, like, what are people doing? Like, I mean, what are you doing? Are you just paying the tax?
Well, so I'm more of a longer term holder, actually. So we roll into our own equity of our company. That's why we created our token, so that we could, on a long-term basis, build wealth there. Now, for liquidity, yeah, I guess when we do sell a little, we are paying the taxes, Brett. But I mean, your program has interested me so much that I got to get into that system to see where I can save next time there's a big run up, in the tokens.
Yeah, no, I appreciate you sharing that. If people want to take action, you can go to capitalgainstaxsolutions.com. Strategies have been going on for 30 years now, thousands of closes, billions and billions of assets values used over the years, 24 no change IRS audits. Now, that's mostly for real estate and businesses, right? Now, crypto is still new for the exits, but we did that again before the last kind of let's say bear market for crypto. But if you want to learn more, you can go there. The second one, by the way, was a client who bought mostly Ethereum, and this is kind of funny, Tony. He bought it for about 100,000, and he was kind of doing it on the side. He knew about it because he worked for Ripple and he knew about XRP and different things like that. But he was mostly in Ethereum. And so he was doing the side, and all of a sudden he sat down with his wife after a couple of years of doing this. He's like, hey, I got some big news. She's like, what? Like, she thought she was scared. You're like, no, I've been investing in a crypto, and it went from 100,000 to 6 million. And she goes, well, sell it all. And he goes, what do you mean sell it all? Well, let me explain to you what this thing is and why I believe in the long term of this. And, back and forth. She's like, but we can retire. Like, I never have to work again. You never have to work again. You can live off the passive income. We can diversify the wealth. And it began this conversation of, okay, we will sell some, but let's compromise and let's figure out a tax plan first. And this became this journey Well, things were up for a while, for 6 to 12 months, but then it dropped, right? Drastically. It went from like 6 million evaluation to like $1 million. And now they're frustrated. She's frustrated. He's frustrated because they both agreed to sell, but they got to get the tax thing figured out. Sorry about that. And this thing is, it does this funny thing now because I'm on the new MacBook. Anyways, long story short, they didn't sell anything because of the taxes, but then it fast forward, it went to 13.5 million. And then they finally pulled the trigger with us. They deferred the tax, but even more than that, Tony, they were a lot in Celsius. They had a third of their capital in Celsius.
Oh.
And so this is the beauty. They were able to get most of it out before the crash and before the Celsius disaster. And so I talked to him. His name is Peter. And I said, Peter, can I share your story? He goes, absolutely. I go, had you not done the DST, how much of the 13 million would you have lost? He goes, not only the drop in value, Brett, that would have tanked, but also we had a third of it in Celsius. We would have lost, maybe all of that, just about, right? Maybe pennies on the dollar.